Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Even though we're a little bit away from the official start of the Q1 reporting season when it comes to earnings, we thought maybe we'd get a little bit of a Q1 preview with our research director, Shiraz Mian, who's here to fill in some of the blanks that might exist out there.
Sure.
You know, we're sitting here talking on the 23rd of March, and up to this point, there's people out there who are going to go on the record calling the Q1 season just downright ugly. Are you in that camp?
Yes, I would say so. Yes, and the reason for that is that the magnitude of revisions that we have seen for Q1, even though the trend is in line with what we have been seeing for quite some time, the magnitude stands out. It's way more than what we have been seeing in recent quarters. And when you look at the magnitude of revisions, I think ugly is the right way to characterize it. And what we're showing here is that the revisions in total earnings for the S&P 500 from the start of the quarter through today are down 8.4%. And we look at the revisions in comparable periods for each of the preceding 7 quarters. And as you could see in this chart, Q1 really stands out way and above everybody else. And some of the issues that we are facing in Q1 were present in Q4 last year as well, the last earnings season. And that's why you see in this chart that the second ugliest in terms of revisions was the preceding quarter. So yes, it's a pretty disconcerting earnings picture when you look at how the revisions picture has evolved over recent weeks.
Might we be getting some lowball estimates also?
That's always in play. Management teams try to manage expectations and try to anchor expectations at levels where they could easily jump through it, and you could see that in this chart. They always anchor street expectations at levels that they could easily jump through it. After all, they get rewarded for beating estimates, not for meeting or for being overly truthful.
Yeah.
So yes, part of that is in play as well, but the overall macro forces that are dragging corporate profitability down, those are very real as well.
So all eyes are going to be on energy prices again. Are they going to put a pronounced drag on earnings?
Yes, energy is a big drag. It was a big drag last quarter as well, but it isn't the only culprit here in dragging estimates. And that's one of the things how market participants have been shrugging the Q1 negative revisions that, oh, it's all because of oil prices. Take oil prices out the picture isn't materially different from other quarters, and that's not actually the case, as this chart shows. Here we are comparing the magnitude of Q1 revisions as we showed in the top chart, but here we have taken the energy out, and as you could see, the magnitude of revisions for Q1 on an ex-energy basis is also the highest that we have been seeing in recent quarters.
All right, I don't want to dwell on the negative for the entire preview here. Can you find any sectors performing to the positive side?
Yes, I could. You have to really try hard to do that, though. There was another chart I had brought in to show the evolution of Q1 estimates in the aggregate on an ex-oil basis. But looking at the summary picture in this table where we show the Q1 estimates, which are estimates at this stage versus what we got actually in Q4, both for earnings, revenues, and margins. And you could see here that half of the 16 Zacks sectors have negative year-to-year earnings growth. You want me to focus on the positives, and let me try hard.
Anyway.
Finance, one of the largest, will have 9.5% earnings growth in Q1. I have to add, though, that even the finance's strong growth is solely because of easy comparisons for Bank of America. Take Bank of America out and finance doesn't look that good. Some of the smaller sectors, healthcare is expected to do good, autos are expected to do good, transportation goes to that energy question, also the economic momentum in the U.S. So some of these sectors are expected to do good, but all the major ones, including technology, aren't doing that good.
And good is going to be a relative term. Apparently.
Absolutely, even relative to what we saw in Q4, which was by no means an outstanding earnings season. We have not only the growth rates in Q1 very low, but the total level of earnings in Q1 are expected to be extremely low relative to what we have been seeing over the last 4 to 6 quarters as well.
All right, at this point, let's just call it weak. I really don't like that U word, but
That's right.
if we have to come back to it, we will.
That's
Thanks,
right.
Shiraz. In the meantime, let me remind you that during the peak of the reporting seasons, you can always find Shiraz's comments in his earnings preview articles on Zacks.com, as well as his earnings trends articles and his Ahead of Wall Street columns on a day-to-day basis, where he really points out the happenings, the change of thinking, the nuances as the S&P 500 earnings are reported. With Shiraz, I'm Terry Ruffalo.